This is the most ludicrously insane Bitcoin price prediction I've ever heard. Probably the craziest one you've ever heard, too. Fidelity is out there saying that Bitcoin could go to $1 billion. Basically, what Fidelity has just done, they've looked me in the eye and said, Lark, you're not bullish enough. That's my line. That's my line, Fidelity. These guys. Anyway, we'll get into that prediction in this video. Also, some really big news. Major adoption story out of the US with the US bank now offering crypto to their customers. Plus, a major Bitcoin fund is about to launch in Japan. So make sure to stick around for all of the juicy news. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic you would like to learn some more about, make sure you subscribe to Lark Davis channel. Tap on the thumbs up button for the YouTube algorithm. And click on the notification bell to know when I put out a new video. Now let's go ahead and take a quick look at the charts here to get started off with. Not a lot to report at the moment. Bitcoin is still just in this stuck zone where it has been for a while now, as we've been talking about. We had a valiant attempt yesterday to try and push up over $50,000, but the daily close came under $50,000. We have not yet achieved a daily close over $50,000. Now, we did have some good volume yesterday, but what happened? We started pumping, and boom! Sellers moved in pretty damn heavily, pushing the price back down, getting us under $50,000 for that daily close. This remains our just key line of resistance here. As we know, consolidation under resistance. This is a bullish thing. This is getting us ready for the eventual breakout. But until that happens, we are still ranging within this zone. We could still see, of course, the price coming back down to retest the 200-day simple moving average before we do finally try and break above here. As mentioned, if we do lose that, keep your areas, your buy zones for support around $42,500 and around $40,000 will be the two key areas to be watching underneath that. But man, I'm telling you, when 50K finally breaks, when the sellers at 50K finally get exhausted, and they will, when that happens, man, Bitcoin's going to put in one of those just straight up honey badger candles where it just goes boom, straight up to 60K or something like that. But we're not there yet. We are not there yet. 50K is still very strong resistance here, so not much to report, I suppose. We're still just ranging between support and resistance. Very key area. We're only going to squeeze here so long, though, before things do take off. By the way, if you want to trade some cryptocurrencies, some Bitcoin, some Ethereum, some Dogecoin, some Cardano, whatever your fancy might be, you need yourself an account over on Bybit. It is the best exchange for longing and for shorting a wide range of different cryptocurrencies. Use the link down below to start your account, and you'll get up to $600 in trading bonuses. Now let's go ahead and talk about institutional buying, or what is likely institutional buying anyway. So this is data from Glassnode talking about Coinbase here. So after a period of moderate Bitcoin inflows following the May sell-off, Coinbase has seen a large outflow of coins, bringing their total balance down to just over 700,000 coins. You can see right here above my head that we've had a massive outflow of coins from Coinbase. I mean, look at this. We had a big spike up right here around $29,000 where a bunch of Bitcoin flowed in, and then a huge amount of Bitcoin flow out. We had a lot of buyers stepping up there. And we've had a lot of buyers stepping up recently. Over the last week, we had a massive amount of Bitcoin removed. Now, Coinbase, this is where institutional players, for the most part, have been going to get their Bitcoin. So we've seen Tesla, MicroStrategy, all these guys, they've been the big buyers of Bitcoin on Coinbase. From Coinbase's Q2 report, 66% of their volume is coming from institutional clients. So yeah, sure, there was some of this money that was inevitably retail money, buying Bitcoin, taking it off the exchanges, sticking it in their cold storage wallets. But come on, that's a lot of Bitcoin. We're talking tens of thousands of Bitcoin have left Coinbase over the last few weeks. That's institutional money. That's the kind of movement that institutional money can cause, which means institutions are buying Bitcoin here at this area of price limbo where we have been for the last couple of weeks. Next up, a big story out of Japan. So Japan's SBI Holdings is planning to launch a cryptocurrency fund. So they're going to look at including Bitcoin, Ethereum, and other cryptocurrencies. So it's not just a Bitcoin fund, but it'll have Bitcoin as well. These kind of products are really important to bring institutional money and more conservative money into the cryptocurrency markets. Japan has had some pretty heavy regulations on the cryptocurrency industry for a while now. They're making it very strict to get an exchange license in the country. And they've also had a lot of restrictions on the different kinds of products that can be offered on their exchanges. There's no Bitcoin ETF in Japan right now, as an example, right? They're even more conservative than the US is in this regard. The US, though, does have a bunch of Bitcoin funds. I mean, the NYDIG, the New York Digital Investment Group, they've got a massive Bitcoin fund, and they're not the only ones. There's lots of different Bitcoin funds in the USA right now, which provide an avenue for institutional investors, family offices, companies, all this stuff to get exposure to Bitcoin. When this launches in Japan, which, is one of the world's biggest economies, when this launches in Japan, it will give investors, those big money investors, an avenue for investing into crypto. Now, they're saying here, well, their fund could reach several $100 million, which, that's kind of a baby fund when you look at the total size of funds that we've seen around the world. But if we had $300 or $400 million in this situation coming into Bitcoin funds, that would be, I think, a very positive start for Japan moving forward, for them to say, hey, look, we've had these Bitcoin funds operating. They're okay. They're just like the American ones, and everything's been fine here. Maybe that'll encourage regulators to allow for more Bitcoin funds and potentially to allow for ETF products to trade at some point on Japanese exchanges. So definitely a move in the right direction. The more access you can get, the better. Basically, what you want for a bull run and to get new highs and to get crazy highs is for the base of money to grow. The more money you can bring into the market, the higher the prices can go. The more access you give, the more users you get, the more holders you get, the higher the price can go. Next up, this is a big, big story out of the USA. This is, it's not the biggest bank in America, but the impact of the story, massive. Vast Bank has become the first chartered U.S. bank to offer Bitcoin buying and Bitcoin custody. Now, what I love about this story is that they're not offering you grayscale Bitcoin investment trust shares, or they're not offering you CME futures trading. They're offering real Bitcoin to their clients. This is game-changing, and we've seen a lot of banking relationships being developed over the last 6 months. The New York Digital Investment Group, they've made some pretty incredible banking relationships to allow for this kind of infrastructure to happen. But here we go. Here is a bank actually saying that you can now buy and sell Bitcoin directly from your FDIC-insured checking account. That's pretty big. You can also do custody services with them if you want. Now, the interesting thing here, I think it's really worth pointing out, is that they're not necessarily going to keep your Bitcoin. You can keep your Bitcoin with them if you want. And I'm sure a lot of people will because, private key management is probably one of the bigger zones of hesitance for a lot of people. But you can actually withdraw the Bitcoin to a private wallet if you want. That's game changing. You can buy it at the bank, you can sell it at the bank, you can store it at the bank if you want to, or you can pull it back to your own wallet. This is awesome. The first of many, I'm sure. But man, I keep saying about this, the U.S. banking stuff. There's, I think, 16 or 17 trillion dollars sitting in U.S. checking accounts and savings accounts. All that money getting inflated away. Some of those people will be looking for options. Some of those people will be looking for Bitcoin. And man, it doesn't get any easier than that, does it? Literally buy and hold Bitcoin on your bank account. That's massive. You don't have to go to a broker. You don't have to go and sign up to Coinbase. You just do it right out of your existing bank account. Game changing. Game changing stuff right here. And look, again, Vast Bank is not the biggest bank in the USA by any means. It's just a wee old little bank. But little things can start big fires. It only takes a spark to cause an inferno, right? This could be that spark for the U.S. banking sector where other banks are going to look around and go, man, maybe we should offer our customers Bitcoin too, because we're a bank and we like to make money and our customers want to buy that, so we should offer it to them so we can make money. This is exactly what PayPal did. PayPal looked around and said, man, we're about to get blockbustered here. Cryptocurrencies are eating our lunch. Now, they sell Bitcoin. PayPal also now lets you withdraw your Bitcoin to your wallet if you want. This is the way. This is the way. Now banks are following in PayPal's footsteps. The first of many. The first of many. Hear me now, quote me later. I'm sure over the next few years we're going to cover dozens of stories like this, probably including some very, very big banks in the not so distant future. Because you have the banks like JP Morgan, for example, quite a few other ones, Morgan Stanley, I think Wells Fargo, now also offering Bitcoin services to their wealthy clients only, not to the plebs, not to the poor clients, not to the people with less than $1 million in their bank account. The wealthy clients, yeah, you guys can buy Bitcoin right now. We're going to let you through the door first before we sell it to everybody else later. You can sell your Bitcoin that you buy now to all of our other clients later on. That's the game they're playing. But I'm fairly certain that we're going to see one of these big banks launch Bitcoin services just like this bank has just done for their clients in the not so distant future. I think the pressure is on right now for all these banks to be the first movers. And others, of course, will have to follow. And the final story for today, the $1 billion freaking Bitcoin, man. Holy cow. Holy cow, Fidelity. What are you talking about, man? What are you talking about? That's crazy. You're crazy, cat. I like you. I like you guys. Oh my gosh, these guys are smoking it hard over there, man. Like, what are they putting in the water over there at Fidelity? It's crack, man. LSD maybe. I don't know. They're tripping though. Those guys be tripping. Holy cow. $1 billion Bitcoin. Anyway, the $1 billion Bitcoin prediction. Basically, Fidelity has come out saying they're massively bullish on Bitcoin. This is from their director of global macro over at Fidelity. He released a new stock-to-flow model, basically, which is this one here, which would see, of course, by the end of the 2030s, Bitcoin gets up to around $1 million. But this is just the extension of the stock-to-flow model, right? We get up to $1 million by the end of the decade. So between here and the end of the decade, we're going to have a 20x on Bitcoin. That's what Fidelity, director of their global macro strategy here, is eyeing up. $1 million by the end of the decade. That's cool, man. 9 years, 20x. That's great. I'm happy with that. As a Bitcoin investor, someone who's got, this is my biggest investment of all my investments is Bitcoin. I'd be happy to take a 20x by the end of the decade. Sure, man. That sounds great. That sounds great. The craziness comes after 2030, because if you look, what starts happening? Oh, we got up to $10 million by 2033. Oh, we got up to $100 million. Just, we're just going to 10x and 10x and 10x and 10x until we get up to $1 billion Bitcoin. That's some crazy stuff. That is some crazy, crazy stuff, man. But look, besides just saying that's crazy, let's break down their reasoning here. One, of course, is that they're talking about the loss of value of fiat currencies. What will a dollar be worth by 2037? Much less than it is now. Now, I don't think it's going to be worth that much less by that point. Let's just point that out. But less, right? This would, $1 billion Bitcoin would have to assume a catastrophic failure of the US dollar, which, hey, at $28 trillion debt, massive deficits, and all that stuff, not out of the realm of possibility. Not incredibly likely at this point, but not out of the realm of possibility. Hope it doesn't happen. Such currency failures are not good for anybody, and they don't want to see that happen to anybody, to have to live through such a situation. But that was a big part of their idea here. But also, I guess we could factor in things like lost Bitcoin. I mean, how much of the Bitcoin is lost right now? We've probably got 6 to 7 million Bitcoin, which are gone forever. Forever. Never coming back. Whew. Lost below the waves of time. So that means the total amount of actual Bitcoin out there, much less. Now by 2037, we'll have 98% of the Bitcoin mined or something like that. So we'll have around 14 million Bitcoin floating around out there, which could theoretically hit markets. By that point, I'm sure there's still going to be people hodling who have hodled for 15, 20 years, who are not letting their Bitcoin go anywhere because it's their savings account, it's their gold, it's their retirement fund, it's what they're going to pass on to their kids. That Bitcoin's not going anywhere. Those are the strong hand holders who have been in it since 10, 20, 30, 40, 50K. Imagine that. You're buying Bitcoin today, you're still holding it in 2037. How much is it going to be worth by that point? A lot more. A lot more is the answer to that question. So look, is $1 billion a realistic price target? I do not believe it is. I do not believe it is. I'm sorry, Fidelity. This stock to flow model goes a little bit too deep into hopium territory here for me, man. Even at $1 million, you have to remember that's a $20 trillion market cap. If Bitcoin were to get up to $10 million, well, what's that? That's a $200 trillion market cap. I don't even want to go any farther with the math because it's ridiculous enough as it is. $10 million by the end of the 2030s, that would be monumentally big for Bitcoin. We'll see. Maybe I'm just not being bullish enough. Anyway, that's what Fidelity said. What do you think? Is Lark not being bullish enough? Should we start talking about this, the $1 billion Bitcoin as a serious possibility? Or are those guys totally high? Totally high. Let me know what you think down below in the comment section. Thanks so much for watching today's video, and peace out till next time.